make investment in either of the following two projects. So there are two projects available. A firm can make either in project A or in project B. The firm anticipates its cost of capital to be 10% and net after tax cash flow of the project for the 5 years are as follows. So directly cash flows are given and the rupees are in thousands. Project A, 0 year is cash outflow, minus 500 is cash outflow. Then there are cash inflows. And project B, again, cash outflows and cash inflows. The discount factor are 10% and 20%. So they have given two types of factor, one 10% and 20%. Calculate NPV and IRR of the project. To find out NPV, we need a discount rate which is 10%. Cost of capital to be 10%. State with reason which project you recommend. Explain the inconsistency in ranking of two projects. So, I will be first starting with project A. Zero, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. What are my cash flows? Minus 500. 85, 200, 240. 220, 70. They are directly cash flow. I need to find out NPV. So present value at the rate of 10%. Find out present value at the rate of 10% of all this figure. Let me remove this minus 500 from here. Minus present value of cash outflow, negative 500. Present value of cash inflow at 10%. So it will be 85 divided by 1.1 is equal to M plus 200 divided by 1.1 is equal to M plus 240 divided by 1.1 1, 2, 3 M plus 220 divided by 1.1 1, 2, 3, 4 M plus 70 divided by 1.1 1, 2, 3, 4, 5 M plus MRC is 616.60. 616.60. My NPV will be 116.60 as far as project A is concerned. I am doing it in calculator, so my answer might be somewhat different from the book because they have already taken a factor. So 1 divided by 1.10, they have taken 0.91. We might have taken up till all the digits which are available in our calculator. We also want to find out IRR. NPV is positive or negative? NPV is positive or negative? It is positive. If NPV is positive, the project is earning more than 10%. Sir, should I try out 12%, 13%, 15%? You should try out directly 20%. See, they have given the hint that you directly try out 20%. Is it all right? We are trying out with 20%. Present value at the rate of 20%. It is 85 divided by 1.2 is equal to M plus 200 divided by 1.2 is equal to M plus 240 divided by 1.2 is equal to M plus 220 divided by 1.2 1, 2, 3, 4 M plus 70 divided by 1.2 1, 2, 3, 4, 5 M plus. MRC is 482.83. 482.80 negative 500. My answer will be 482.83 minus 500. It is minus 17.17. Now I know that my IRR is between 10% and 20%. I will use that interpolation formula and find out IRR of this project. What will be IRR of this project? It is base rate, which I'll be taking it as 10%, plus positive NPV divided by difference in NPV multiplied by difference in rate. Base rate is 10 plus positive NPV is 116.60. Difference in NPV will be addition of both. It is 116.6 minus 17.7. $133.77 multiplied by difference in rate is 10. My answer will be 116.6 divided by 133.77 multiplied by 100 plus 10. It is not multiplied by 100, it is multiplied by 10. 116.6 divided by 133.77 multiplied by 10 plus 10. What is happening? One 6.6 divided by 133.77 multiplied by 10. Yes, plus 10. It is 18.71. Is IRR of this project. What is my NPV? 116.60 or 17.17? What is my NPV? 116.60. Why I am finding out this NPV 17.17 negative is only to find out IRR. This is trial and error just to find out IRR. It is not a portion of my answer. It is just to find out this figure, which is 18.71. So project is earning more than 10%, but the project is earning 18.71%. You need to do similar thing for project B. 1, 2, 3, 4, 5. Cash flows are 480, 100. $70, $30, $20. First, I need to find out present value at the rate of 10%. Minus present value of cash outflow. This will come present value of cash inflow. Minus present value of cash outflow will be NPV. This all figures at the rate of 10%. So 480 divided by 1.1 is equal to M plus. 100 divided by 1.1 is equal to M plus. 70 divided by 1.1 is equal to M plus. 30 divided by 1.1 is equal to M plus. 20 divided by 1.1, 1, 2, 3, 4, 5, M plus. MRC is 604.51. 604.51 minus 500 is 104.51 positive is my NPV. Tell me if your calculator answer is different. If you have found out in calculator, if you have found out otherwise, then it is all right. In calculator, I am getting this answer 104.51 is NPV. I need to also find out IRR. So finding out IRR, I know it is earning more than 10%. I will be directly trying it at 20% because in question there is an hint given that you directly try out at 20%. So at 20%, my present value of cash inflow will be 480 divided by 1.2 is equal to M plus 100 divided by 1.2 is equal to M plus 70 divided by 1.2, 1, 2, 3, M plus 30 divided by 1.2, 1, 2, 3, 4, M plus and 20 divided by 1.2, 1, 2, 3, 4, 5, M plus. MRC is 532.46. It cannot be 532. Okay, it is 532.46. What is the problem? The problem is I am not getting a negative NPV minus 500. It is 32.46, again positive. So my IRR will be greater than 20%. What is IRR? The rate at which NPV is 0. The actual rate of return the project is earning, which will be more than 20%. So I'll have to find out present value at the rate of 30%. And let me get one negative figure. Without getting a negative figure, you cannot use that formula. Why? First, you need to get the range that IRR is between this to this figure. If this both are positive, you cannot say it is between 10 to 20%. So I need to find out present value at the rate of 30%. 480 divided by 1.3 is equal to M plus. 100 divided by 1.3 is equal to M plus. 70 divided by 1.3, 1, 2, 3, M plus. 30 divided by 1.3, 1, 2, 3, 4, M plus. And 20 divided by 1.3, 1, 2, 3, 4, 5, M plus. MRC is 476.15. 476.15 minus 500. I will be getting answer in negative. 476.15 minus 500 is minus 23.85. One positive figure, one negative figure. My IRR will be between 20% and 30%. I can use the formula, find out IRR will be base rate plus NPV, which is positive, divided by difference in NPV multiplied by difference in rate. Base rate I'll be taking 20% plus NPV positive is 32.46 divided by difference in NPV will be 32.46 plus 23.85, 56.31. Difference in rate is 10. 32.46 divided by 56.31 multiplied by 10 plus 20, it is 25.76. See, we are not getting exact figure because the book has done more approximation. They have taken only one digit in that factor or two decimals in their factor. We have taken all the decimals which are in calculator. So our is more correct answer than what is given in the book. They have taken this factor. And this is only up till two decimals, right? We have taken up till all the decimals. I am summarizing the answer. Project A, Project B, NPV, IR. Project A, NPV is 116.60. It is always at 10%. NPV is always found out at discount rate. IRR is 18.71. NPV of project B is 104.51 and IRR is 25.76. Now we are going to actual problem. This problem was just learning calculation of NPV and IRR. Yes, for learning IRR, this question can become somewhat good base because it is 5 years and some cash flows are given. You can practice how to find out IRR. But ultimately, we need to take a decision. Try to understand. Had you found out only NPV, what is NPV of project A? 116.60. What is NPV of project B? 104.51. I would have opted for project A. I would have opted for project A. What will be my decision? I should go for project A. If you see the IRR, project A is earning 18.71% and project B is earning 25.76%. Had you found out only IRR, your decision would be project B. But you are in practical life and you are having both the answers and now there is a dilemma. You may select project A, you may select project B. Both are beneficial because both are having positive NPV. Both IRR is greater than required rate of return. So practically you can select either of the project A or project B. But which project is to be selected? Please try to concentrate. If there is inconsistency in ranking of two projects, what is the meaning of inconsistency? NPV says project A and IRR says project B, then there is an inconsistency. If there is inconsistency in ranking as far as the methods of capital budgeting are concerned, then NPV will prevail over IRR. NPV is a superior method to IRR because it considers variability in cash flows. And so whenever there is a conflict between IRR and NPV, NPV will always prevail. I will be selecting project A. What is variability of cash flow? I will tell you. Try to concentrate. Project A is having minus 500. So the cost is same in project A as well as project B. In project B also it is minus 500. So both are having same project. Try to just understand this. You will be learning in some of the you would have learned or you will be learning in your capital structure. But try to concentrate over here. There are two types of investment, A and B. A is earning 10% return, 20% return or 30% return. What is the average return? It might earn 10%, it might earn 20%, it might earn 30%. Simple average. 30 plus 20 plus 10 divided by 3 is 20%. So A is earning on an average 20%. B may be getting 0% return, 20% return or 40% return. What is the average return? Again, still it is a 20% average return, right? So both project is having an expected average return of 20%. Still both are not same because the figures are different. By just seeing this two cash flow, my question is, which is more risky? Project A is more risky or project B is more risky? Let me give you the answer. If you invest in fixed deposit, your expected rate of return is 6%, 6% or 6%. If you are gambling, your expected rate of return is 0%, 6% or 12%. What will be average rate of return in fixed deposit? 6%. You are going to get 6%. What will be average rate of return in gambling? Will be again 6%. 0 plus 6 plus 12 is 6%. Which is more risky? Where the variability is higher. See here practically standard deviation is 0. Your standard deviation from mean is a 6. So once you find out standard deviation, you get a risk. Your deviation is more. See the deviation 20 on upper side, 20 on lower side, 10 on upper side, 10 on lower side. The variation is 10% and 20%. Higher the variation is in return, higher is the risk. If variability in return is higher, higher is the risk. So you should select the project. If return is the same, you should select the project having lower risk. And you can just see the cash flows. See the variability in project B, 480, 20. In project A, there is a variability, but it is somewhat consistent, right? 200, 240, 220, 85, 70. Here there is a huge variability, which will be considered by NPV, but will not be considered by IRR. IRR will give you what actual rate of return the project is earning. All right. So, please understand this type of questions are asked n numbers of times. I have taken in classwork only one question just because all the answers are same. You just need to find out NPV, IRR and write down this statement. If you see your suggested answer, they say there is inconsistency in ranking of two projects due to variability in cash flow. In case of inconsistency in ranking based on NPV and IRR, NPV based decision making is preferable. So in this case, project A will be preferred due to higher NPV. This was C 5.1.6.